Okay guys, hear me up here. We just had the release of the Canadian CPI yesterday, and we're gonna have the UK CPI release in a few hours. So what can we expect for UK, and what can we trade based on the CPI from Canada yesterday? Well, I have the numbers here in front of me, and the core CPI year over year for the month of April came in as 2.5% for Canada. Consensus was nil, so there was no expectations in a sense, but previously it was 2.2. So yes, it grew it up a little bit, 0.3% higher than the previous. So showing that there is a sticky sort of inflation there. The core CPI month over month was expected to be at 0.2%. It came in to be 0.5% from the previous of 0.1. So big increase, higher than the consensus and higher than the previous. And then the CPI month over month came in at, as expected, negative 0.1, as the previous was 0.3. So decrease a little bit of inflation. So in a sense, a mixed data. In my opinion, the Canadian dollar will maintain it, range bound sort of way in the next coming weeks. So not much to expect from Canadian dollar. I just want to go back one part as well from the RBA. But before, guys, please subscribe to the channel. Give us a thumbs up. It's really important when you're supporting this channel. It makes me happy. It makes everyone's happy here to be continue to, uploading, posting those good videos, as every day you have new videos, and every Tuesday, Wednesday and Thursday you have the webinars for free. We don't charge anything. There's lots of people out there charging for even like not that good content. So also 4 to 5 p.m. today we're going to have the webinar from Sydney time, okay, Australia time. Right, so and don't forget to join the Telegram link as well. The Telegram group, the link is on the description, so that's where you can get the link for join the Zoom call tonight, this afternoon. Okay, so just coming back a little bit on the RBA yesterday, we have the Reserve Bank of Australia, and after yesterday webinar that I told I would be, sort of going a little bit more in depth into the webinar about the RBA, we noticed something that it was pretty interesting. From now on, RBA even expect a 50 base points cut, and that's why the Australian dollar sell off so quickly and so fast. That's the whole reason. At the first time, yes, they cut 25 base points after everyone sort of had a look at what was happening. They saw that yes, there is a possibility of continuing to do cuts, and that means that the Australian dollar can possibly be a little bit bearish in the coming days. I'm still bullish because of the risk on mood into the market, but just at the coming days, most likely what we will see is a tactical short being entered into the market. But I do believe in a continuation of a long Aussie dollar. For now, a little bit faded off, but continuing to the short term. Okay, so going to the UK CPI today, we have the CPI month over month and the year over year. The year over year is expected to be at 3.3% from the previous of 2.6%, and the month over month is expected to be at 1.1% from the previous of 0.3%. So both of them are expected to rise quite a lot. I would say that the month over month from the previous of 0.3 to the consensus of 1.1 is a big jump. It's a big jump actually. But what we can see here is the Bank of England, the BOE, it's been very dovish in a sense. So yes, they know they're going to continue to cut whatever it matters. Inflation has been substantially coming down since the peak in 2023, if I'm not wrong, or 2022, 2023. And therefore, they already have something on the mind that continue to cut. And that's it. Okay, so I don't think that release for the CPI will change anything. Big things. I most likely continue to believe on a dovish rhetoric from a dovish and data dependent rhetoric from the BOE. Okay, now moving forward, pay attention because there's a few things shifting, as I say yesterday, and as I did an update this morning on the Telegram as well. Let me just show you guys here. So every day I do updates onto the Telegram like these ones, and you can get access for free. It's, as I say, the link is on the description, okay? So the markets now are going increasingly nervous about the rising global debt, and that's the talk about what is, you know, what's a good debt and what's a bad debt. So the thing here is that the yields on US debt are pushing higher, so therefore it's going to be much more expensive to US to pay the debt, and that's not a good debt, it's a bad debt, because how they're doing this is basically, okay, what's your GDP and what's your debt? Okay, so if the debt is 3 times higher than the GDP, that's a bad debt, because you're going to be having to go 3 times higher your gross domestic product to be able to pay your debt. So that's quite impossible, in my opinion, from a domestic sort of view, from a micro sort of view, okay? But anyways, US and Japan, they are under a lot of scrutiny at the moment. The Japan debt has surged past 200% of the GDP, so pretty much 3 times, as I say, and the US is hovering around 120%, and that's a sign, you know, for further fiscal expansion on the horizon. If the Fed prints money to pay that debt, that's it. It's destroyed, okay? And the US 10-year yields is flirting with the 5%. If it gets to 6%, it's going to be a really massive snowball that no one wants to have, okay? So just pay attention on that. If the US yields continue to rise, most likely we will have a strong US dollar. But remember, that's a very tricky scenario, because it's going to be strong, but in the surface, because on the underneath of it, it's cracking, okay, because the debt. So that's what is going on at the moment. Hopefully you guys could understand. If not, come today on 4 to 5 p.m. into the webinar, Sydney time, okay, and the link to join is on the description. So you're going to join the Telegram group, and then you're going to join, I will send it, as soon as it hits 4 p.m. I will send the link for you to join the Zoom call. Guys, thank you so much. Don't forget the thumbs up, subscribe to the channel. I see you this afternoon, or I see you tomorrow. Bye bye.